Hey guys, how's it going?
Hey guys,
Hello, how are you?
Well, ready for another week. Happy Father's Day
Fantastic.
to those out there celebrating. And to
happy
our
Father's Day,
global,
everyone.
and to our global audience, welcome back for another week of trading. Quick disclaimer up front before we get into introductions and all that. Just keep in mind we are not trading professionals or financial advisors. Everything here is for educational and entertainment purposes only. Just three friends here looking at charts and preparing for trading for the week. So with that, introductions probably aren't necessary, but this is Sean and Kay. Be sure you give them a follow on Twitter as well as their YouTube channels. You can see it in the links below. I'm Trader Nate. You also find me on Twitter, and we do this every Sunday. We get into the markets, get into charts, and have a great time of it. Kay, how are you doing today?
I'm doing great. Nate, how are you doing today?
Live. Can you tell I got some energy today?
Yeah, nice. Let's do this.
How about you, Sean?
Yeah, good. Ready for a 4 day a week. That's always exciting when you get an extra, one less day.
Yeah, short week.
Yeah.
So still lots of charts, but a short week for sure. Let's take a look what we got here actually and get right into it. So we got June 19th, markets closed for Juneteenth federal holiday. So everybody enjoy the day off. Taking a look back at last week, we had market overview showing some big names making some big moves for sure. Anything jump out off the page for you, Kay?
Not much. I think we got Oracle did pretty well. Honestly, we can't see it because it's hidden there, but it was over 16% after the earnings on Monday. So that was, I guess, stood out. I think all the big names are kind of flattened here and there. AI hype is slowing down. I think the market in general is trying to assess where to go from here.
Yeah, Sean.
Yeah, I think Tesla maintaining its strength there is a good one. And Meta 7%. I didn't realize that until I just saw it here. 7%. That's incredible.
Yeah, and Broadcom and NVIDIA still powering higher despite their moves. Look at NVIDIA, of course. Yeah, some big moves. And this is after we've already been making a nice move higher. For those of you who tuned in last week, you might remember me saying I was flipping to bearish. That was not accurate. So, I didn't it's not like I sold all my positions and went to cash, but I was feeling bearish heading into the week for sure. And no way did that pan out. We had a nice week, positive week to the upside. I'll actually look at those numbers in a second. Just a quick look at earnings. Not a lot here, right? We've got FedEx. Anything else really interesting, you guys, this week?
I mean, Accenture is a consulting company. I don't personally follow, but I know a lot of people there. CarMax could give us a decent idea into the auto industry, how things are progressing from a new car sale and used car sale. I think fact sets for folks who don't know what this company does. This company provides data to the trading data to all the investment banks, and this is like Moody's or this is like Bloomberg Terminal. So this is another company that, but again, it's pretty much the end of the earnings season. It's people are looking forward to the next one. It's over. Most of the big names are gone down. We know how the market will perform now.
Yeah, KB Homes in there. Go ahead, Sean. Sorry.
I was just saying it's coming around sooner than we think as well. The next earnings, isn't it? It's about a month away.
Always. I feel like that's always the case. I was going to say KB Homes is snuck in there too. I am curious with respect to the housing market and how that's looking. So yeah, homes and cars and houses, I guess.
Yeah.
Real quick, looking at the numbers for the week, S&P was up 2.58%. The Dow was up 1.25%, and Nasdaq was up 3.25%. So huge numbers for the Nasdaq. And on the year, it's up over 30% now. S&P is up almost 15%, and the Dow's lagging at 3.5% roughly. Russell 2K, which is our small caps, which we've been looking at with IWM a lot, only up 6.5% on the year. So, I mean, it's nice and in positive territory, but relative to Nasdaq and S&P, lagging quite a bit. Bitcoin got back above 60% just barely this morning. And the VIX volatility is just compressed, right? I mean, we've got the VIX below 14, closed at 13.54. I got.
Yeah, exactly.
Yeah. I mean, what do you make of that?
Well, I think interestingly, the fear and greed index, because now we have been tracking this every single week now. We started 528, which was after the Memorial Day. It was starting at 66. This week, we are at 82. We are in extreme greed right now, the market. The put to call ratio on 528 was 0.83. Now it's 0.71, which clearly shows, it correlates that there are more call options versus put options. Um, take it what it's worth. I know, Nate, you were bearish last week. I, I won't say we should be bearish, but I'm also not going to be bullish. I think as traders, we should just take it at the face value, because the market can turn around. Again, I want to say that, as we said, the saying goes, right? The market can stay irrational longer than you can stay solvent. So
True statement.
Yeah.
Well, I think that's why we look at the charts, right? And let the charts do the talking. Don't head into the week with a bias. I'm sure you guys have heard that.
Yes.
So I'm actually going to blip us off the screen here for a quick second and talk about the 4-hour candles for SPY. So looking at this, I wanted to talk about the range and the clear signal that happened to kind of give you an idea it's time to get in, and we're going to press higher. Despite my bearish tones towards the end of last week, you could have completely ignored me, had looked at the chart and gotten to where you wanted to go. So the 4-hour candles here show we had a fake out a couple of times, right, at the 414 top end of the range, trying to break out here. And then after those failed attempts, we retest the lows, which was down at the 404, 405 level. Both times you see there's this fake out and then a retest of the lows. But then on the third attempt, we didn't pull all the way back to retest lows, right? We get this breakout. First, we had this consolidation in the upper half of the channel, and then you get this breakout that fails and falls back, but again holds, held that higher low right where I noted there. And then it moves back above 414 and with some strength there. That to me is the signal that, yep, we've got good moves here. It even formed a higher high. So if you waited a little bit longer and you got in that higher high, you're still looking good today. Or if you saw that pullback, I mean, really technically speaking, pulling back to the 50 moving average there for the 4-hour candles, that'd be really the ideal entry, obviously. But my point being, once we broke out of that 414, above that 414 range, after not pulling back all the way to retest those lows, that was a sign of strength and made sense to get in. What do you guys think about all of that?
Well, I think the higher high there says it all. The buyers are coming in, it comes down. Obviously, the buyers coming early, then it moves on up there. And I think what you said about the 50 moving average basically hasn't really touched it since that last move back in January. Is that? Yeah, January.
Yeah.
But yeah, generally it's just looking very positive. And yeah, like you said last week, you were a bit cautious about it, and Kay just said then possibly, who knows what to think at this point.
I mean, for me, that 78.6%, I didn't mention this, the very top end of the screen here, we've got this price target. It's the Fibonacci levels actually is what we're looking at here. I'm just zoomed in so you can't see it, but these are the fib levels from pulling all the way back since the beginning of this March higher. And the 78.6% is what I'm targeting next, which is at, you can't see it on the screen there, 451.76. So I don't know. That's where I think we might be marching. Kay, anything else to add there?
I think, and we have been talking about this, the put to call data, which is generally more bearish on the index. It's 2.57. But if you look at the put to call volume ratio, it's 1.05. So that kind of shows you that it's even out right now. If we step back a little bit and look at the daily chart for SPY, I do see that it's getting a little overextended at this point in time. And right this point of time, you're almost back to your April 2022 high. It's a very interesting, because when you hear all these analysts, everybody's hoping for a pullback at this point in time.
Yeah, I just jumped over to Sean's chart because he's got the weekly here.
Yeah,
and
I think this will make more sense.
About. Yeah.
Yeah.
Go ahead, Sean. What would you What would you say here?
So the reason I went for the weekly this week is you can really see in perspective how much we've actually run since only March, really. And the last couple of months has been, well, almost 3 months. Is that really? No, yeah, sorry. The last 3 months has been absolutely incredible. And the reason I've highlighted the 450 level there is because that's obviously probably quite a psychological one. We hit it back in somewhere just before 2022, I reckon that probably is. And I don't see any reason why we can't go up there and hit that. And you said before 453, I've got a line kind of roughly there as well. That would be where the resistance is, but I think 450 could be a psychological one, maybe play around there for a little bit, come back down to 443 and make another move up. But at the moment, I don't see any reason why not to keep trading in this direction. Because obviously the trend is your friend at the end of the day. So I think that's that's my, not advice, but my note, should we say, for this particular point.
Yeah.
Yeah, I'm going to actually jump back, and I don't know if that's not what we're supposed to do, but I'm jumping back because this 20 that's right, I am going to do what I want. So this 20 moving average on the 4-hour candles, you can see how it's being respected, but also the 50 moving. One thing I didn't notice, like you said, the trend's your friend. So as long as these are being respected, whichever time frame you're looking at, I like the 4-hour, and it's been working well for SPY. But yeah, if it's respecting it and then it breaks, then that's your maybe indication to pause for a bit and see what happens. But otherwise, the trend is still up and to the right. So.
Yeah. And even on the options data, at the money calls and puts, you have almost 20,000 call options versus only 13,900, so about 14,000 put options. So clearly it's still on the more bullish territory on the SPY, and the expiration is next week. So
this is just a V-shape recovery, is what we're looking at here. It's pretty impressive.
It is.
I've fallen in love with the 4-hour candles, apparently. So look at that again for the Qs. And again, bottom left, upper right, and the same kind of message as the 20 and 50 simple moving averages have been providing support. And so looking for a break below potentially, but that green trend line I've drawn there, that extends all the way back to the start of the year. So I would be looking for that to hold and continue to play upside. We could see a healthy pullback to about 360 for the Qs. And if we got that, that would be ideal, quite frankly, right? It would cool things off, pull it back to the 50-day or 50-hour moving average on this chart anyways, and hold that trend line all at the same time. Would give everybody a breather. Let's allow some catch up. I bet you the daily is a little bit extended as well. So I'm looking to use these moving averages on the 4 hours for both of these ETFs. Do you like the 4 hours, Sean?
I do. I was just going to see what the percentage was like to go back down to the 360 level, and I'm just doing that 1 second. That's about 2.16% from where we are down to that kind of 360 level. So that's not unheard of. You can do that in a day. You can do that over the course of a week. So like you say, the likelihood of that happening, it could be quite high, possibly. It's just the markets, they go up and down.
Yeah, NASDAQ was up 3.25 last week, so pulling back a little over 2% is nothing, right?
Yeah, essentially it's nothing, isn't it? And like you say, it's healthier, I think, in the long run, especially on these 4-hour candles, which are a little bit more stable compared to the kind of 5-15-minute candles, in my experience anyway. But generally, just looking at this chart, again, it looks very healthy. And that's all I wanted to say, add to this one for your one.
Okay, anything to add before we jump to
Sean's?
I mean,
the options data is pretty... the options data is the same as usual. 2.05 put to call ratio. Again, on index they're always a little bit more bearish, but yes, I think we said the same thing, right? On the daily it does look a little bit more overextended, but I think still the bullish momentum.
What about the weekly?
So we can see a little bit more resistance here on the Qs rather than the SPY. At this kind of 369.50 level, which I've drawn, but kind of you could say 370 as well. But we hit it back kind of just the turn of the 2022, 2021 kind of area. And then resistance again in July, kind of middle of last year. You can see on the chart there. But really here, it's just, You can see the top right corner. I've written "surely not."
I love that. Yeah.
I thought I'd have a little bit of comedy there, but you just never know with the market, the way it's gone. The tech's obviously going mad, and the earnings haven't been too bad the last few quarters for the big tech companies at least. And I don't know. I want to maybe get your opinion on this as well, but I don't see big tech earnings kind of coming down so much, especially with like the layoffs, etc. So the cutting costs, SG&A, and that kind of thing. Maybe with a bit more experience of your guys' heads. What do you see perhaps in terms of earnings in the next couple of quarters for the big tech? Because that's essentially what a QQQ is.
After you, Kay.
Well, before I even get to the Tesla earning, if I just quickly share with you the options open interest, I think that will give you some perspective. So on the SPY, we see options contract in 19,000, 15,000 level. On QQQ, you have put option at the money, 2,662 open interest. And at the call side, you have 1,450. So and this is all at the money, call options and put options. So the volume definitely, the open interest volume is definitely much lower than SPY. Going back to Sean, I think your point, I think we all underestimated the Q2 earnings, and I think most of the people, even the analysts, the professional analyst, and retail analyst, and we were thinking the Q2 earnings would be actually pretty bad, and it actually came out pretty strong. And that is one of the reasons why the market also rallied, because buy the rumor, sell the news situation. I do think I agree with you. The earnings may still remain strong, but we still have to assess how the interest rate hike impacts the companies in the long term, because I still feel like there's not a consensus of whether the impact is really felt yet or not on the companies. And maybe as the rate gets more prolonged, right? Because forget the cut, they're not even pivoting at this point of time. They just paused it. They said we may increase it 2 times, 1 time, 3 times, depending upon how things proceed, which is one definitely clear indication that they are not going to cut rates anytime soon. So whether they increase or not, they might keep it at the same level. And that is how the pain will continue in growth sector. And we might see a shift from the tech sector to more value companies, because Apple has already reached all-time high. Tesla is already reaching its overextending itself. So you might see profit taking and moving that money, some of these, to value companies. That's how at least I see that happening in the next quarter or so.
So a couple of interesting notes I've got along these lines as I'm staring at the weekly candles here coming right up against that resistance. We've got a lot of talk about rates being still going to be increasing. We've got student loan repayments. Who knows what that's going to do to the consumer economy, right? But at the same time, don't we have a bunch of folks that have been sitting on the sidelines, maybe a little bit more bearish, that manage money and now need to catch up, right? So they're going to be behind the 8 ball doing the whole catch-up trade, especially we're coming to the end of the quarter. So it's I'm wondering, as we go into Q3, what kind of added money comes piling in, and if that doesn't just prolong this. The student loan impact of the economy probably doesn't come in until Q4 or maybe even until next year, because of the kind of delayed effect that would have. So I'm wondering if there's just not more upside, given all of the, like I said, people that are just kind of behind right now and trying to catch up.
So with that, they're looking at this chart and thinking, oh, blimey, 1, we missed a chance, but 2, where on earth do I buy? And so they're almost waiting for a pullback, essentially. And at this rate, you're saying that maybe it may not even happen. I mean, that makes sense if this money is sitting on the sidelines and they're kind of dripping it in over time on top of the retail money as well. It's just slowly going up. But as a hedge fund or something, you must be looking at this chart thinking, blimey, I missed it. Yeah.
I mean, how many weeks now has it just been going up, since March, basically, right?
Lots. So I don't envy their job at all.
But at the same time, if you think about it, the most of the market rally has been driven by 8, 9, 10 stocks. Other stocks which are, your value plays, they haven't really driven the market buy, right? So if let's say a lot of people are sitting on the sideline with cash, question is, how much upside do you see getting an Apple at all-time high versus getting into a value company which is down, let's say 20%?
Yeah, that's a true question to be asking, and also the small caps, right? I think that is another area that's showing, or is going to give us signals, and we've got that chart coming up a little bit later on. It's definitely interesting. We've had the prior move that we called out. Now CNBC is riding our coattails. I don't know if you guys saw that, but we've been talking IWN for like 3 weeks now, and all of a sudden I heard the talking heads last week. Like, oh, it's breaking out. Look at this. It's like, yeah, they're watching the trading. That's what's going on. All right, guys, let's get into some individual names here. Sean, I hand it over to you.
Yeah, of course. So this week I've got the normal kind of Tesla, Neo, and Palantir, but I've also stuck in ENVX as well, which is kind of a bit more of a trade opportunity. But we'll start off with Tesla here, and I brought up the monthly, as you can kind of see. And I just kind of kept it nice and simple as well. And you can see that the 20 moving average, obviously it's a monthly one, so it's 20-month moving average. We're hitting that kind of point of resistance in a way. Now, I don't know how solid this will be. I just thought it'd be something to bring up this week, just to kind of keep an eye on. Because you can see back in the previous month, should we say, the last year, the little yellow highlighted areas I've got there. It has bounced off of that kind of area a few times, but you can also say in between that it hasn't, it's blasted straight through. So that's what I mean about this. It could just blast straight through. Of course, it is Tesla, but it's just something to note about. Perhaps maybe this might be a pullback opportunity. But again, that's just wants to bring this up here. Just ending this one here, you've got the trend line kind of coming down as well, which I thought actually was quite strong on the monthly, and it is just absolutely rocketed straight through that. And then in order, generally on a 5-minute or 15-minute, if you get a trend line break, you wait for this candle to close, and then you look at the next candle. And it looks like obviously this one might be closing way above the trend line, of course. But we have 2 weeks left of this month. So yeah, there's a little bit of safety aspect there as well. But yeah, that's what I want to see on Tesla here.
Yeah, what a breakthrough of that trend line, no doubt. I hadn't looked at the monthly candles recently at all, and it's a clear break. The 50, that's the 50-month moving average side, and then that looks like a nice bounce off of the 50. So something's got to give, right? Either the 20 above or the 50 below. Looks like it's kind of getting pinched between those two moving averages.
Absolutely, yeah. So it's quite exciting for Tesla, I think.
Mm-hmm. Yeah,
always.
And on the option side, it's also always bullish with Tesla's 0.82 put to call. Yeah, it's pretty bullish, and both on the volume side as well, 0.62.
Yeah,
that's like, I noticed. Sorry,
I was gonna say that's like how long running now too. Like, I mean, Tesla's been on this incredible run now. You can see it here going all the way back to the start of the year, but
I can say I think we got this started 516. Since 516 on the daily chart, it has like pretty much just going up straight from 516.
All green candles, right? Had some crazy streak.
Yeah.
Anyway, wow. Sorry, Sean, I interrupted.
No, I forgot what I was going to say now, so it can't have been that important.
This is a powerful looking chart though on the monthly. Hopefully we get some nice I mean, if you're looking for the upside, hopefully you get that hold and push above that 20. That's what
and congratulations to any Tesla traders that are out there, Tesla long-term investors. Obviously they're looking at this chart and they're rubbing their hands together, and yeah, congratulations to you guys. Unfortunately, I'm not one of them, so yeah, maybe next time.
And just to add to the folks who are trading Tesla, I think you also have this triple moving average crossover for 4-week, 9-week, and 18-week. Generally, I don't follow that, but there's a crossover for that also.
Okay. So yeah, this one is Neo, and you can see it's quite messy. And this is not like me, but we've had a bit of an eventful week, as you can say. But yeah, we'll start with a bit of news, should we say, that they've reduced all the model prices. They're using their battery swapping technology as an option now. So when you buy a vehicle, you can opt in or opt out of the kind of battery swapping. Just gives the consumer a little bit of choice, I think, in my opinion. And they had an event on Thursday, but we won't dive into that too much. Just a bit more kind of, getting the eyes out there, getting the feelers, getting the models viewed, shall we say. But yeah, back to the chart, we can see that I kind of dimmed the channel that was going down in the kind of light grey kind of lines, as you can see there. So we kind of broken way out of that channel, which is fantastic. This is the daily chart, of course. You can kind of get what I'm saying there. And what I've really highlighted is the kind of blue dots at the top there. I've kind of moved from my circles, Nate. I've gone to little kind of highlighted dots. I don't know if you like that or not.
I think I like them.
Fantastic. That's good news. But that's my my kind of next point of resistance. And I think with the momentum we've had in the last 4 or 5 days, we had a bit of a poor day Friday, but that's to be expected with such a big run up and kind of heavy retail stock. But I think we can maintain this kind of 885 level, which again is with the red dots. We can maintain that and make a nice little solid move to 1060. I think that would be amazing. But 1060 to break that, I think we'd have to have more news, definitely better deliveries. But even just to touch that, I think that would be incredible in the next couple of weeks, of course. And the last thing I want to say on this chart, I'll keep it brief, is the kind of little blue arrow we can see at the kind of $8 mark. And that is the 20 potentially moving through the 50 moving average, which could potentially set up for a nice kind of trend change, hopefully, because we can kind of see in this chart it's a negative trend, and we don't like that at all. Well, I don't like that. Other people might like that. I certainly don't like a negative trend on NEO. But yeah, hopefully we can change and move to positive direction. I know last week I said it was looking very bearish, because you can see in that kind of blue arrow area there, we've got that big red candle pushed down. And I mean, we said that last week. It's going down. It must be. It could come off the trend line or the moving averages, etc. But no, it just decided to blast straight through that, and that's the impact of news. At the end of the day, if good news comes out, it'll just blast out any technicals. So news over technicals is what I just finished on there. I can just stop talking now. So I'll hand over to you, Nate. What do you think?
I would say you breaking out of this wedge. That's I mean, I think it's great that you highlighted that, because that's exactly what's going on. And then it's just, I mean, look at it's exploded. And by the way, I've looked forward at a couple of your charts. Man, you got all the good charts. They're all taking off to the upside. I love it, Sean. Anyways, yeah, it's been a nice couple of weeks, right? Getting some nice breakouts for these names, and NEO just absolutely shocked me. I thought it would really struggle to get, above, honestly, $9. I thought maybe at that 885 level you had, that it would just kind of bounce around between, 8 and 9, somewhere in that range, after recovering a bit. But it's taken off, which is great to see. So yeah, I'm rooting for you. I know that you're following this one closely, and that's a classic wedge break there. So let's see how much further we can go.
Yeah, absolutely. Okay, any options on this one?
Yeah, you're positive. It's 0.51, so you are doing very well on this one.
Yeah, fingers crossed for NEO. So let's move on to the next bullish stock that Nate seems to think I have bullish charts.
I'm telling you.
True. It's true. I must do. It is me. I'm a very bullish person. I can't stop thinking positively. Anyway, so moving on, we've got Palantir next.
It's working.
And it is working so far. Anyway, Palantir next, and we can see the kind of big green line I've got there, which is a 17. And I think that's kind of the golden target for Palantir at the moment, to kind of move through that 17. I've kind of zoomed out as well on the daily here, and I wanted to kind of go back to where that green line last touched. I can't quite see when that was, but it looks like it might be kind of mid 2021, maybe beginning 2021. But really, what I wanted to kind of touch on here is, one, the volume at the bottom there. It's consistent, it's high. You can see my highlighted line just kind of running across it. And compared to kind of obviously previous months, it's massive. It's massive, and that's a huge change in the company's thesis, etc. But yeah, and on top of that, you've got the moving averages coming up really, really nicely. And this is the daily. Maybe next week I'll pull up the weekly and see what that's doing. But yeah, the 20 moving average looks like it's going to be above 14. Which, if we can come down, retest that, fantastic. But really, holding 14 and breaking through 17 is my main target for this stock in the near term.
17 doesn't look like it's even. I mean, I didn't look further back in history, but it doesn't look like it should be necessarily an incredibly tough level. It's certainly a resistance level. But if we get markets moving higher on more positive AI news and just continuing to push higher, what did you have next there? 1880? Yeah, it looks like it could be a quick just a quick blast right up to that level where there does look like there's a little bit more consolidation in the past. So
Yeah,
anyways, super bullish.
Just to add to that,
sorry.
Go ahead.
No,
so just to add to your $17, you have 10,200 open interest on the call side. And versus if you look at 16.5, it's only 5,000. So there is definitely a lot more call options at $17.
Awesome. The reason I said 17 is because that massive kind of drop we had last time we touched it. So that could be right.
Yeah, that's a good call. That is where it stopped, didn't it?
Yep, yeah, but I mean, the consolidation we can see, it's not really consolidation because it's not really moving sideways, but it's kind of consolidating in a positive way. All of these candles are quite tight, but they're still moving up, and I quite like to see that in the stock. But time will tell.
That volume too. My goodness, that's holding up.
So I'm wondering, Nate, if maybe a credit spread could be a play here, right? With Palantir, if it's a bullish signal.
Yeah, so if you're trying to play upside because we've got that ceiling around, if you wanted to say 19 or maybe even at 18 if you wanted to pull it in a little bit closer and maybe do something like an at the money and then $18 strike, something like that. Is that what you're thinking, Kay?
Yeah, definitely. Yeah, I think so. Because just opening a call option, just buying a call at 17, I think that's just too basic here. But you never know. Sometimes those basic strategies work well.
Yeah. So why? I mean, what brings that up? Because I think it's good to point that out. What made you think about using a spread?
Well, if
is it the premiums?
The reason is to limit downside, right? To limit downside. That's one thing. However, if you want to buy the call options, just the call option is only 31 cents. So,
Oh, I'm sorry. Did I mishear you? You were talking about selling a spread. Is that what you're saying? I misheard you. So two things. One, if you're playing to the upside, so I like using spreads on either direction here. And sorry, Sean, we're going to take over the Palantir chart here for a second and talk options. So if you want to play more upside, like Kay was saying, if you're just going to get in with like 17 strike calls, for example, you're going to be paying a big premium for those. You're going to be paying a ton of money for extrinsic value, meaning the option's worthless if the stock just moves sideways. So how can you offset some of that cost? You can sell another option further out of the money. And I like to do that when you have these huge premiums, right? NVIDIA is one that I look at, same kind of thing. It's just really expensive to just buy a call outright. You need big moves. But if you sell a further out of the money option against that, you reduce your costs. So you don't rely on the stock moving up quite as much, but you do cap your upside, right, to whatever that level is that you sold at. So it's a great way to get in with a little bit less of a cost. And then Kay, you're saying to the other side of it, and where instead of just selling an outright put, right, selling a cash secured put for what have you, I mean, this could pull back severely. So you want to limit that by offsetting it with another option to the downside.
Exactly. Yeah.
Because
I think because for most folks, right, it's options is just about buying and selling, whether on the put side, on the call side, and then you can use various ways. You can do vertical spreads, horizontal spreads, diagonal spreads, calendar spreads, and it can just get more complicated. But yeah, I mean, these kind of charts, it just like helps you to understand more and more on the option side. And I'm like, you can really play the credit spread, debit spread on these ones as long as you can get the direction right.
I think doing a deep dive on something like that as a once-off is something we should do. Take note,
I think so too.
Give a good example of what strike prices and what the math looks like using that. I think that'd be great. We should look at that in the future. Anything else on Palantir, Sean? I'll hand it back to you.
Just on that, if you do that, I'll just sit in the background smiling. How about that? No, nothing more to add on this chart, unfortunately. But yeah, it's just looking very good, and I'm hoping it will continue.
Yeah, me too. Let's see here.
Awesome. So this one is my last one of the set, and this is ENVX. If you haven't heard of it, they basically make batteries. They develop and design batteries for kind of cars, lithium-ion batteries, that kind of thing. The reason why I brought this up is because there's lots of different levels here you can see, and it's a bit more of an opportunity more than anything. Nate, you might be able to speak to this in terms of the gaps. Obviously, not every gap is filled, but I see a gap here at 1777. I've highlighted that in yellow, as you can see, just briefly. And they had good news. They hit their manufacturing target really early, basically, for Q2. So that's still 2 weeks left. And they've already hit their target, which is incredible. And that's why you see that move that we had. We had a gap up, it dropped back down, and then it got bought all the way back up on a particularly kind of mixed day within the whole market. So having this kind of performance stock throughout a kind of tricky market, I think is also quite bullish as well. And with the levels I've drawn, you can kind of take them with a bit of a pinch of salt, but my ultimate goal is kind of that 1777 level to kind of fill the gap, shall we say. But with these levels, you can see the reason I've zoomed out so much is so I can emphasize these levels. So you can see 17 has been hit way back in the past, and kind of in the middle of the chart, as you can see there as well. And 1840, if we did move past that gap, that would be my next one. It's not so solid, that one, but it acts as a very big support kind of halfway through the chart, which I think is about September 2022. Yeah. So this one's a bit more of an opportunity for me. Just to emphasize on this a little bit more, it's above all three moving averages. It's above the trend line that we can see. And that candle, and if you're wondering about candles, I did a video recently on my channel all about kind of bearish and bullish candles, just the basics of it. So go ahead and jump over if you're kind of not too sure about how to read candles. But this one for me is a bullish, bearish candle. So you can see it's red, but it's very, very bullish because the buyers have come in and they push that straight back up. And who knows what the next one will be.
Yeah, that looks bullish to me. I'm with you. And that 1550 level is what I'm staring at. I love that you drew that out. It's like that nice little band of resistance, basically, and it's pushed right up into it. And I think basically you're looking for a move above and maybe a retest of it, and that would signal a nice continuation higher away from the trend line a little bit, though. So even a pullback doesn't necessarily mean anything bad here, right?
No, exactly. And like you said, at 1550, if we can break out, come back, retest, could be a nice little breakout trade opportunity. It's one of these, one of those stocks that it moves very fast. You can see that throughout this chart. This is the daily, and it literally starts from $7 to 26 that you can see just in this picture. So yeah, be careful if you are trading this at all. It's just very cautious when you're trading this stock.
Is that like a 9? It went from 9 to 1250 on a single day. It looks like, at least it ranged that much not too long ago. That's huge. 30% moves in a day, kind of a thing. Good opportunities.
Yeah, if you play these stocks right, it's okay. If you play these stocks right, they can work out really well for you. But you just got to learn that risk management side of things. Have that against you. Keep those stop losses, etc. It's okay. Go ahead.
Yeah, no, this is perfect. I think this is a good cash that you have, right? Because I'm looking in 1 year, the stock is up 40%, and Wall Street has a strong buy rating for this company. This is pretty rare, right? You generally don't see a very strong buy for no-name companies, and it's like right now there are 12 analysts that are covering this stock. 10 have a strong buy, 2 have a buy rating. So very interesting.
That's pretty decent coverage.
Yeah, I did not even know about this company until today.
That's the beauty of this trade and triangle session.
Sean's adding to our watch list yet again.
Yes. And just so you know, guys, you have 53% institutional ownership in this company.
So there's room.
Wow.
Yeah. Public only owns 30%. Individual insiders are 16.45%.
Yeah, thanks for this one, Sean. This is great.
Yeah, awesome. That concludes my set for this week. I'll hand you over to Nate for more wonderful charts.
Oh, they are wonderful. Let me tell you. We got more breakouts. I wanted to try to keep up with you. And ENVX was that last ticker. I'm just making sure I got that. You got my attention there, Case, and you had 12 analysts covering it. I did not expect you to say that. 3 or 4 would be nice, but 12, that's some decent coverage to pay.
That's
Go check that
amazing.
out.
Yeah, 12 analysts.
Yeah, I'll have to see. That's moving in the right direction. Well, I've got NVIDIA here, and we've been talking about NVIDIA for a bit, and I mentioned last week that we've got a channel that we could be breaking out of. And just like we were talking about earlier in the stream on SPY, we've got same kind of setup and breakout for NVIDIA. So before I get into this, though, just a quick reminder, we don't do this a lot through the stream, but don't forget to subscribe and hit the alert button and subscribe to Sean and Kay's channels below. And yeah, appreciate you guys' support here every week. But okay, getting back to NVIDIA, the 1 hour candles here that we're looking at, that same pattern. We've got the range that established between 395 and 376, and we would try to break out only to see it retest the low. Then again, we got to the highs, but this last time around, it held about midpoint of the range. So before it moved higher. That alone is not the time to get in, right? That holding the higher low, holding the 50 moving average on the 50-hour moving average for the 1 hour candles here. You could certainly consider that a bullish spot to get in, but we're still in the channel. It could have gone right to 395 and just reversed and completely wicked down and burned you right to the bottom of the range, right? So it's not necessarily the ideal setup, although it's not bad. But here you see on Tuesday, it broke above, and Wednesday comes back, kind of retests that 395 level and starts moving higher again. After seeing it hold that higher low above the 50 and it pull back to retest that 395, I mean, that retest is the ideal entry. And then, hindsight's always 20/20. I can make myself sound really smart by saying, hey, and then you get the breakout, right? But the idea here is to kind of highlight that, in fact, the range matters, and that's why I called it out last week. And this is how you kind of look at it. You want to see that sign of strength, which here is holding the higher low and holding the 50-hour, and then the breakout occurring. Sean, I know you trade breakouts more. What would you add here, or did I get anything kind of off kilter from what you do?
No, I think you're spot on really there. But I think what I want to add to that is the kind of the accuracy with breakouts is not always there. You can see that with the range you've got here, and you see the pullback. It retested. It did retest, but not exactly. So this range, you may have had a limit buy set at 395, and it didn't quite reach there, as you can see that with the candle on there. So my only thing with this is it's these levels that we draw. Obviously, not obviously financial advice, but at the same time, they're not perfect, and your levels won't be as well. When the viewers, your levels won't be perfect either.
Yeah.
So nothing is perfect. Trend lines, support and resistance, that kind of thing. But if you're trading breakouts, it might be worth just having a little range, perhaps that you would perhaps buy, or maybe drip in a few shares, whatever, that kind of thing. But yeah, just a kind of accuracy behind breakout trading there from me.
I think that's a really good point. You can't. It's all about probabilities and getting close, right? And getting as much information as you can. But I mean, if you're trying to wait for the exact penny to every level that you've drawn, you're gonna not get it right. It's more of the range, like you said. I totally agree.
Absolutely.
Okay, we getting more options to the upside for NVIDIA.
Yeah, I mean, the put to call is 1.07, but when I'm looking for next week, at 30 delta on the call side is about 17,000 open interest at 450. And if I look at 30 delta on the put side, this is what, around 397.5. That has about 1,300. So put options, yeah.
Yeah, I'm looking for this 50-hour moving average again to hold, and it looks like it's trying to hold there towards the end of the week. And if it does, looking to retake 435 and move higher. I mean, again, the trend's your friend. I think we're going to repeat that cliche quite a bit.
Yeah,
good old
cliche, but yeah.
And it shouldn't be mocked, because the trend is your friend either. A lot of traders, well, I say a lot of traders, a lot of people when they're beginning trading, they try and get in early to get the massive gains so they can show off to their friends. Got massive gains, but really they should go the other way, essentially, and just follow the trend. And you'll be surprised how much money you can make really just from following the trend.
Absolutely, 100%. That is sage wisdom right there. Any trader that has seriously, any trader that has any experience will tell you that you'll lose way more money than you will make trying to time those tops and bottoms. I mean, it feels good when you hit them, but when you hit them 1 out of 10 times, it's not really, doesn't really matter, does it?
It's pretty good, 10%, right? That's pretty good.
Yeah.
I guess it's all perspective and the size of the trades. But anyways, I think your point's really well made. This chart I have here for Mara, Marathon Digital, we've been talking a lot about this one from a cover call perspective. I'm kind of joking around here this week because last week I called out two-day upswings repeated over and over. Look at this consistency, 2 days. So what did it do last week? It had a 3-day upswing and a 1 day. Of course, not a 2-day, right? I mean, I could have fudged and said Thursday, Friday was 2 days, but really that was just a 1 day. Friday came back and retested and moved higher. So just all kidding aside, it's still trading in the range, right? And it's not too much different from last week. But what I'll say is, looking at all the charts we've been talking about this week with the ranges and the breakouts that we've been seeing, one of the common themes is for a show of strength is not pulling all the way back to the bottom end of the range. So maybe with Mara, we see that 946 level, maybe 960 hold up this time around, and it continue to move higher. If we see something like that, or then it goes and tries and retests 1075 or even moves above it, that could be your sign that, okay, this range, this consolidation period might be over, and we could be picking a direction. Same thing if we were to move down to 850, come back up and not really get above the midpoint of this range, and then go back down and break below the 850. That would be the sign of weakness and potentially the breakdown out of the range. So there's no prediction here yet, but that's kind of what I'm watching is, are we just going to continue to range, or are we going to get a show of strength or weakness here? For now, I'll just keep selling covered calls. I know you are too, K. We lose K?
Yeah. I my CSP for 850 continues. I keep
you're in the
selling cash secured puts and I don't get assigned. Yeah, I'm in the first stage of the wheel. I never got assigned, so I'm still holding CSP.
Nice, yeah, it's holding well above.
My addition to this one would be, so Bitcoin obviously kind of correlates with this, doesn't it? If I'm not, yeah,
100%.
So,
yeah.
And Bitcoin on the daily is on a downtrend, but it's very close to breaking that 4 or 5 times. So if it does break that, then Marathon will follow that, right? Generally,
yeah, it has been pretty well. Yeah, it's pretty well followed Bitcoin if Bitcoin moves higher. But what's been interesting and lower, and conversely, but what's been interesting is I've noticed like another ticker, Riot, RIOT, and similar space. It's ranging but drifting lower, and I think that's what you're saying about Bitcoin's kind of drifting lower as well. Where Marathon seems to be holding, and I don't know if it's what they're doing internally or what have you, but it has been consolidating in a much more horizontal kind of pattern than the others. So it's interesting to note, but I think full circle, whatever Bitcoin does, Marathon should pretty much follow.
Yeah, exactly. And I think if it is consolidating rather than moving downwards, if Bitcoin does break through that trend line, then surely that would mean Mara would break out further because of the strength behind the actual stock.
Yeah,
but just speculating. Nothing concrete here.
Yeah, for now, what I'm doing is selling cover calls when it moves to the top, and selling cash secured puts when it moves to the bottom of the range, and teasing K about not getting assigned so he can't get in on the shares. I think that's my plan for the coming weeks.
Good idea.
All right, good. That's the plan for Marathon. DraftKings. So not as much fun with DraftKings. So this is where my jealousy came from, Sean. I think with your charts all moving up and to the right, looking great. DraftKings is rolling over here. And we've talked about it a little bit, right? It's sporting season's coming to the end a little bit. All the big sports here in the States anyways. EPL is on its break, right? There's just not a ton going on. So perhaps it's a good time to roll over. I'm looking forward to get back down to this buy zone between 22.75 and 23.50, and looking to see if it holds. If it holds there, I think it's a really great entry point for another potential trade as we get back into the sporting seasons coming up in a few months. But if it doesn't and it breaks down lower, then it's a wait and see kind of situation. We might see a break of the trend. We got the trend break, but it was quickly rejected at 26 again. So I wouldn't get too excited unless we get another break of this current trend line that I've drawn. But even then, 26 is going to be tough to get through. It's already been rejected, 3 times. So that's my take on DraftKings this week.
I know you said I post bullish charts and bullish charts only, but I did actually post a bearish chart on DraftKings this week. So I don't always post bullish charts. But
it's your fault.
Yeah.
This is your fault.
My fault.
Did you have some observations? You're saying you're calling for a pullback?
Yeah, so I basically highlighted the fact we've got a bit of a triple top, as you can kind of see in this chart that you've drawn here.
Mm-hmm.
And on the daily, if it does break the 20-moving average, it'll, for me, aiming for kind of $23. So you kind of highlighted that a minute ago as well. But that kind of goes in line with the 50-moving average on the daily.
On the daily, gotcha.
That's kind of what I highlighted, a bit of support at 23. But yeah, we'll see.
And
bearish.
You also have a 21-day price has moved down below the 21-day moving average.
Gotcha. Yeah. So, everybody knows Sean is does have a bearish chart out there. I like your bullish charts.
He's bearish on all your stuff.
No, I'm not. I think mine was going to go up.
I see. We got a little rivalry starting here. Okay, I'm good with that. Good stuff. All right. So yeah, look for DraftKings to hold at that 23 level, 23 to 23.50 if it does roll over here. And then moving on to IWM. So I was kidding earlier, but only half kidding. We were ahead of the pack on this one. I did not hear too many talking about IWM breaking out. We got to talking about it on that first big candle. So in this, the larger chart here is the 1 hour, but we've got the daily in kind of subset here. And the first candle that moved out, which is actually white, but the green candle, white candle, what have you, that's when we got attention. We started talking about it. And the very next week we had the pullback to retest the 179 prior resistance level and got it. So nice trade, moved right up to 187 and has been consolidating. So now I'm highlighting with these 1 hour candles the consolidation between 184 and 188. It looks like this is another range that you can watch, similar to NVIDIA last week, where look for a break of one of those two levels and then a retest for a potential continuation, whichever direction it picks. So that's kind of what I'm looking for, given that we've had this great run. It could really go both ways, but Kay, we were talking earlier about only having the 7 or 8 big names driving the markets up. Now we're having this kind of broadening of markets. Well, IWM to me is going to tell us what's going to happen here. Are the small caps catching up? Exactly. Are they broadening and pulling up? And are we going to break out? If so, that's massively bullish, I think, for the overall markets. And we could just see continuation to the upside. But if it doesn't, if it fails and pulls back, then hey, who knows what happens? Maybe it comes back to the prior range. It could cool things off a bit, but it would not be speaking to any breadth, right? We'd still just have the 7 kind of leading the way.
Yeah, and I think go ahead.
Go ahead, Kay.
There you go.
No, I said for investors or traders, right? I mean, an index consists of multiple stocks. So if only 2 stocks or 3 stocks from that index is pulling that entire market, the risk to reward ratio, anything could happen. One bad news, one lawsuit, one bad earning, one bad future outlook can completely take down the entire market. So you would want it to be spread out. The bullishness should be spread out across all, or at least the majority of the companies. And as Nate, you said, right, if we don't see that among the small and mid caps, this bull rally, I don't know, you want to call it a skinny bull? How much can you run, right? With 7 to 10 companies, how much can you run? You're pulling 490 companies behind you. That's not going to work out for long. Yeah.
I think that we need those other companies to start moving up, and potentially that's what we're starting to see. But I'm watching IWM to get a better idea. Sean, were you going to jump in with something as well?
I've just got to note that on the daily there, the small kind of square we've got there, the 20 moving through the 100, is that 150? You've got the blue line?
It
the
is,
dark
yes.
blue line. That moving through would be quite bullish as well, I think.
Yeah, absolutely. That's another good catch. And if the 50 can follow suit and just, a few days or weeks afterwards also push through, we're off and running. So that'll be interesting to watch. Those moving averages crossovers, right? If you get the shorter term crossover above, like the 20 is moved above the 50, that's shorter term duration bullishness, I think is what you're calling out. And then the 20 moving above the 150, again, a good signal. But that 50 getting above the 150, and I think most people look for the 50 above the 200 day being the golden cross, right? So even longer term bullish. So for those of you who are unfamiliar with all of that fun moving average signaling. So, all right, enough. I feel like I've been really jabbering away this week. So, Kay, please stop me and take it away.
All right. So for this week, which is a short week, I only have 4 stocks: Apple, Google, SoFi, and Intel. Those are our staple stocks that we always discuss. Now, what can I say about Apple, right? Again, making a new all-time high of 186.99. So 181 was a level that they have been holding since January 2022. It's finally broken. We are almost at $187. And interestingly, Apple is the biggest company from a market cap standpoint. It's up 47% year to date. When you hear companies like SoFi, which is few $1 billion, this company is in $1 trillion, is up 47% year to date. Great run, very happy. But at the same time, if you look at the candles over here this is a daily chart, it's overextending. And what is now happening is the price targets that we are seeing is at 190 for Apple, and it's trading at 187. So question to me, or question to anybody who is trading Apple, is what is your potential, right? From an upside potential to the risk of downside. And as Apple keeps overextending, the risk to reward ratio, it gets very narrow, and then the risk increases and the reward decreases at this point in time. The 50-day moving average is about 172. The RSI is extended, it's at 70, so it's definitely overbought. Analyst and market currently are looking for a correction, and most likely if the correction ends up happening, I would expect the stock to come down to that 175 range. That would be your August 2022 high, and kind of consolidate at those levels until you can have that big push. Most of the big pushes happens because of some kind of an event, key event. The WWDC event is over. So the next event that I can think of is going to be probably the September launch of new phones. So that could be one. Interestingly, last week we talked about the put to call ratio, and I've been tracking. So in June, we started the June at 0.87, which is kind of, bullish. That has gone down to 0.9 put to call. So the puts are increasing against Apple. Last week, we had 110,000 call options expiring at 185. Look at what point the trading stopped at $184.92, which means all those call options expired out the money. And this week, now you only have 26,000 at 185 and 18,000 put options at 180. So I think I would be careful. If you are buying long term, whether you are buying long term or trading, you have to be careful with Apple, especially at these extended levels. That's how I'm seeing the chart. Nate, Sean, what are your thoughts?
So yeah, 2 things for me. One, your background fits perfectly with the RSI you've got there on my screen. I don't know if you can see that, but it's wonderful.
It does.
And the second thing is if Apple does pull back from here, that pulls down the SPY, I think. And that could be quite telling, shall we say. Nothing on the technicals for me personally, but just not two important things. One important thing, if Apple does pull back, the SPY will pull back, because obviously it's massive. It's the biggest holding, right? Is it? The SPY?
Yeah, exactly.
Yeah. So yeah, that could be one to potentially look out for.
Yeah, have major implications. It's one of the 7 holding everything up. we always hear about it's a stair step up, or at least I've heard. I'm sure you guys have stair step up, and then it's just an elevator down, right?
Window.
Apple is doing the opposite. It's like, we'll walk this back. Look at it, up and down, all the way to the bottom of the channel, and then it's like, cool, we hit our low, straight to the top, right to the penthouse, right up to 187. Barely any pause there. That's just not something you see a lot, and it's really been carrying the markets. So I agree with you, Sean. If it rolls over, I think everything's going to follow.
So overall, I'm not a big Apple fan right now, especially at these prices, because as an investor, I can't buy at an all-time high. It doesn't make any sense for me to buy. I'm not going to dollar cost average at these levels. And even opening any trade on this one, it just gets a little bit riskier because the downside potential is much higher than the upside. So
yeah, definitely the weird levels.
Okay, I personally like Google at these levels than Apple. Why? Because if you notice, even though we have a little bit of a bearish signal here, the price is crossing the 21-day moving average. Everybody uses different moving averages. I personally like the 50 and 200, but sometimes I do check 20-day and 21-day because those are used as well. So there is a bearish signal, but I like this stock. Why? Because it's getting a range bound. And once a stock gets a range bound, it's helpful in trading. Like, especially from an options perspective, you can get in, get out on a weekly basis. And I'm pretty sure if you do shares trading, Sean and Nate, I guess you guys can probably,
same thing.
Give some more technical analysis on that. I see the 129 as the resistance, that if as long as, and then 122 as a support. So this is a range bound that I'm looking the stock to trade in. The volume is stabilizing, so that's a good sign right here. Your RSI is 58, so perfect. There's not overheated, not oversold, not overbought, not oversold. 50-day moving average is 114. I would love it to come down to 114 so I can have to put less money on cash secured put, but I'm okay with this zone as well. The put to call ratio is 0.78. It was 0.76 last week, and the week prior was 0.77. So slightly bearish, very slightly, but the volume of call and put options have gone down drastically. And I think because we had the quad witching day last Friday, so all the open interests were much higher. It was 36,000 call options versus only 8,700 call options at the same price of 125. And it was 14,000 put options last week versus only 4,000 at 120. So you can see that as the OPEX has expired, now you have a much lower volume. So this is how I'm looking at this chart, hoping that it will remain in the range bound so we can trade for a longer time. What are you guys saying?
I really like this chart. Yeah, I like this chart. So the differences I see here are these, you called it out, the consolidation, and the fact that it is above the high from August 22 is, that to me is my probably favorite part of this whole chart. So it definitely could break back below. It's no guarantee, but if you're looking for upside, that is a positive signal for sure. And I could see you using, if you wanted to use that as your base, that 122, 123 level, and then using the fib levels, maybe 118 as your stop loss to get out, kind of looks like a decent risk reward setup to move higher and try to get back up to 130. I don't know, Sean, is that how you would look at that from I guess you don't trade ranges though. You're more of a breakout trader. But yeah, what are your thoughts?
Yeah, so for me, looking at this chart, it's a 20 moving average. You can see it's hugging that in the last 6 or 7 days, and it did so again back in May for a little bit longer, so about 10 days. It kind of hugged around that area. So we can see, at least in the recent price action, it does really like the 20 moving average. What I would like to see is maybe a little bit of a push off of that, and like you say, 130, and then maybe kind of range bound in between 122, 130. But yeah, it's difficult for me to trade this kind of stock because, like you say, I am a bit more of a breakout trader. So I would be looking for it to break potentially that 122. And then that level you mentioned, K, of 114 would be an area of interest for me to come back down to. So I don't tend to short stocks. But everyone knows I'm a little bit more of a bullish trader, should we say, as Nate's pointed out a few times.
I like it. I like it. This is a compliment.
Yeah. But shorting, I know it's a bit more of a negative way of looking at markets, and you can make a lot of money shorting because typically when stocks go down, they go down quickly. And that's why people like shorting generally. But yeah, if I was to look at that, I would look at to kind of basically short from 122 to 114 from my perspective.
Nice. And the funny part is that, not the funny part, it's the interesting part is that, how we all look at a chart from a different perspective, right? Sean is more of a breakout trader, right? So he trades on I think I start liking on the range, right? I'm like more, I look at the zone and I look at the range and I trade between the range. So I like that. On the option side, it works very well. If you have too much of a breakout, it actually is negatively impacting both sides of the options play. So that's why I like the range bound play rather than the breakout. But this is amazing. Like you get to learn so many different types of strategies. It's amazing.
Yeah, I totally agree. The different perspectives is what makes it great. What makes a market.
Yeah, and it gives us all different ideas, not just us generally, but maybe the viewers as well. Just maybe looking at charts slightly differently, just having those different perspectives ready for them to kind of implement their own trades.
Exactly. Now, moving on to my third stock, which is, I love SOFI, but I don't like the chart.
Okay.
Because this is again like a breakout, right? But the breakout problem over here, if you notice that pink candle at the top, right? That one is a spinning top.
Mm-hmm.
And when you have a spinning top, especially now you have those 2 days of trading that it's going down. Now, if you go back to, I know that my our camera is right there, our photos are right there, but on the next you will notice that the same thing happened around the May time frame, not the May, sorry, what was that? February time.
Yeah, that's when everything took off, right? Start of the year. Yeah,
exactly. So that is one problem. 91% up year to date, right? How much more do you think it's going to go up? And that's why we got 3 downgrades on SOFI most recently. Now those downgrades are not bad. They went from overweight to neutral, overweight to buy. Price ranges are anywhere between $8 and $10. So again, it's a range bound, right? You have about $2 or so to play around from a price target standpoint. People are not talking about valuation of the company. So you had debt ceiling discussions. You gave the expiration for student loan moratorium. We don't know the real impact on how it will impact the economy, how it will impact the consumers' discretionary area. But for now, I think I personally am looking for a support level between 794 and 813. I think that the 61 to 65, I really want the stock to come and form a support there, because if not, then we could see all the way going back down to your what is that level here, 653, and then we can again go back to those old lows of 480, and so would love to, but I think 794 to 813 is what I am targeting. Options play, as usual, is always bullish. At $10, you have 18,700 call options, and at 6.5, you have 18,900 put options. So pretty even out. It's not much of a data point I can decipher anything. What do you guys see from this chart?
Sean, I know one thing jumps out on the page is bullish to me. I'm wondering if it's the same thing for you.
Oh, I don't know. That's a bit of pressure.
Yeah.
You go first. I can say yes or no if you go first.
All that volume. Look at how much the volume's holding up.
Oh,
right? Like in the past, we had those big volume spikes, but they kind of simmered off pretty quick. But here it's holding up. And that's kind of what you saw on what's going on with Palantir and even Neo Neo's probably too early to tell, but Palantir, right? It's sustained that volume. So that's what jumped off the page to me here. It might have a chance of holding up.
Yeah, and I think for me, looking at this chart, it's the $8 level, 100%. I've got it on my chart as well, because you can see the 2 peaks in this chart you've got here on the screen. Previously, the 2 peaks kind of go around the 8 to 820, that kind of level.
Yeah.
And what I'm really tuning to here is that 20 moving average. If we can maintain this level for a couple of more days, that 20 moving average will be in that kind of $8 level. And if you look back on this chart, the 20 moving average is respected quite a lot. Generally, obviously, it's not perfect. No stock is, but it does respect it quite a lot throughout the chart. If you just take a moment, just look back. I was looking at while you were talking about the stock, and the 20-moving average, this SOFI seems to like. And you get that with stocks. Some stocks don't like 20-moving averages, and this one is one of those that does like a 20-moving average. So I've been looking for it to kind of hold that $8, and hopefully that 20-moving average kind of come up to $8 at the same time.
Yeah. No, I think that this is a good point. I did not notice the 20-day moving average. I think after our last week discussion, I have added the 20 DMA on top of the 50,
I
200.
noticed that.
Yeah. So all my charts moving forward will have all those three lines there, along with the fib levels. So yeah, so trade safely with SOFI, because you could see more downside as opposed to the upside potential. And I know SOFI investors and traders don't like to hear this, but you just don't go to the moon all the time, right? There will be and pullbacks are healthier, because if you don't get a pullback, you get into the overheated territory, and then the stocks could crash as well. So I think it's important for stocks to pull back, consolidate, and then take a next leg up. This is how generally the trend goes up. The last stock, which is also one of my favorites, and I think Nate, you will start liking this stock. I put it over here: 20-day moving average, crossover 50-day, very bullish momentum.
Yep.
On stock.
I've been waiting to talk to you about this one all week.
Yes. And just like Google, just like Apple, just like SoFi, Intel is our staple, at least in my staple, in terms of how I trade on a weekly basis. 2 weeks in a row, we talked about that if Intel could finish above the 3370, we could establish an uptrend, and that's exactly what is happening. The put to call ratio, it's getting more bullish. We used to have 0.53, 0.56 now. Calls now are at 3K calls options at 36.5, and at 5K about 35. So now the call options are around the 30, 35, $36 range. Couple of three important news that happened with Intel for this one is Intel is investing in the ARM IPO, which NVDA was about to acquire and they couldn't acquire.
Interesting.
Analysts are identifying that there is an AI opportunity within Intel. So the AI word, the AI hype is going to come to Intel at some point in time. And lastly, Intel is opening a new chip plant in Poland. So all that good stuff happening for Intel in the coming quarters. And I think this could be a breakout for Intel to go back to a couple other levels. I think I would I want to see how this breakout happens. The candle looks a little weaker, especially on the last candle on the day trading, and see if there's a pullback. But I think it's a pretty bullish momentum at this point in time.
Yeah, you still have room to run to really test that next level at the 50% line there. Was it 37.13? But yeah, you want to see it get above there and hold to continue this move higher. But even if it doesn't, right, if it pulls back and retests 34 for a bit, it would still look like it could do that and hold this nice kind of steep trend line that it's forming to the upside. So overall, I mean, I was dying to talk to you about it because I saw the breakout and I was like, oh, I know Kay's paying attention here. So yeah, nice upside. And honestly, a little retest of 34 would be nice and healthy to see. And if it can hold there, that would be super positive for this one. You're going to have to adjust your strike prices and your strategy.
Yes. Sean, what are your thoughts on this? This is a pure breakout. This is your chart.
Yeah, so I don't want to toot my own horn, but last week when you brought this chart up, I said the nice little bounce off the 20-moving average there looks like it might be breaking out of that kind of trend line at the same time as that kind of the moving average. And what's it done? It's gone up massively since then. And I didn't trade it because I was looking at different stocks, but I wish I did. But yeah, with regards to kind of breakout trading, for me, it would have to kind of come back down to that kind of 34 level. And then I would kind of go look to kind of enter there, depending on what's going on. But the news generally, like you just mentioned, I didn't know any of that stuff. And I think that's actually really, really good news because ARM is supposed to be quite well noted within the kind of semiconductor, that kind of
exactly.
Yep. So that's really bullish from my perspective.
Yeah. So that's all the charts I have for this week.
What a great set of charts. A lot of
good stuff.
Yeah, a lot of interesting stuff this week. So to end it, kind of wrap things up, and before we go into short week, definitely it's going to be hard to wait through Monday. So remember Tuesday morning not to be overly anxious in your trading. And what I took away from this past week, really big time, is all the points of information. Like we called out trend lines, we called out support levels, Fibonacci levels, looking at volume, just really taking a look at all the different signaling, right? Breaking out of ranges, all of the above. So the point is, the more information you trade with, the more you get probabilities on your side. And really that's what we're doing. It's a game of probabilities, right? So that's what I always try to keep in mind. There's nothing that's perfect. You're not going to get a trade to the penny, but use as much information as you can and get those points of information to put those odds in your favor. So that's my note this week. Sean, I'll hand it over to you next. What would you say?
I would just say thank you very much for watching us. We're still kind of this beginner journey of YouTube, and we're kind of putting the pieces together. But I think it's going well, and I really appreciate if you give us some feedback, maybe in the comments down below, or just DM us on Twitter.
That'd
And
be great.
if you haven't already, hit the subscribe button. That old cliche, but it does help. Why not? Why not watch us? We have good ideas.
Yeah, why not? What are you doing
Yeah.
that's better than watching us on a Sunday anyways, getting prepared for your trading next week? I agree. How about you, Kay?
Well, all I have to say that it's going to be a short week. Enjoy the trading. I think I'm learning a lot by coming here and talking to Nate and Sean, and some of the questions that I get from the watchers and viewers. It helps us trade safely. I guess both of you just covered everything. So I'm like, say, enjoy the Father's Day. Happy Father's Day to everybody. Enjoy the long weekend if you have the Monday off, and just rest, relax, learn more, and keep trading safely.
Yeah, thanks, guys. Thanks for all the information this week. As always, super appreciate it. And we'll catch everybody soon.
All right.
Take care.
Bye.
Thanks, guys.
Bye-bye.